Hi, folks. Welcome to a Friday edition of Money and Politics, and I hope that you're going to be having a great night tonight, and that you have a great weekend. It's hard for me to believe that it has been a week since we had the investor conference Friday morning in Nashville, and I and others who were there got to hear in person Brian give his address. Also, then that we were there for the rest of the weekend, and Tom and I didn't get back until Monday. I hope tomorrow that I can do a recording with Allison Braun, and she is, you may recall, the Humbl investor that bought the very first NFT. And actually, she did that, bought this picture here. She was the purchaser of Clint Eastwood, and that was back in June when that happened. So we would hope to talk to her. Allison was there in Nashville, and I wanted to get her perspective. Not how much fun did you have, but having had Allison the opportunity to talk to Brian and the rest of the team of Humbl people who were there, Humbl staff who were there, what is it that you think about the company? And so we'll look to do that as an interview to catch up with Allison at that time, tomorrow sometime, and so we'll do a weekend edition. I had someone asked me, one of the Humbl people online, and I'm looking over to read it, just say, why is the stock price not moving? And I wanted to address that as we sit here. We have Humbl closed at 79.5 cents, let's say. So kind of a nothing move. But why is it not moving? And one of the things I'm going to have is have Allison respond to that as well. When I gave my response to this person, let me just read it because it occurred to me as I was writing that I should share this with a broader audience. I wrote that I think we're past the depths of despair that we hit a while back when it seemed like just everything was not going Humbl's way and the price was just being dragged down incrementally day by day by day. And I said we hit the depth of despair when the stock price got down to about 65 cents. Since then, we're in a trading range from about 78 cents to $1 but now with the NFT gallery coming out, with the ticket gallery, the beta release, which I haven't tried to look at as yet because I've been busy trying to catch up on a short week. But with the beta release of the P2P, peer-to-peer, and some more positive news that I think will be coming our way as we go along, that, again, the future is not going to be as bleak as maybe certain months that we had in the spring of this year and the early summer. And the other thing, Brian, when I did talk to Brian down in Nashville, he said the same thing. He said that he thinks since the release of the NFT and the ticket platform that we've really turned the corner on the attitude. And he and I are in agreement with that. And what I'm just basically saying to you, and what I said to this follower, was that right now, and let me bring up, by the way, something that I had earlier in the year. We're buying the future. We're not buying the present. So when the stock is at 79 cents, that to me is a bargain because of the tsunami wave of fintech, the strength of the management of Humbl, and that we are now seeing what they are doing, and that they, as I said to Brian, you guys have accomplished a lot in a short amount of time. You've done the Monster Studios, you've done Tickery, you've done some other deals that are out there and you've heard before. And Brian said to me, as I reported earlier in the week, that he's still on the hunt for deals. And which I think even more generically what he said is that you don't want to grow a company just on organic growth. In other words, internal growth, internal sales. You want to go out and be able to use your stock price as a currency to go out and buy good companies that are out there. And then that way you're bringing that revenue and you're bringing those profits in to the fold of Humbl. So I wanted to address that. And so now I have. I think that's pretty much what I wanted to say. One other thing, and I'll spend more time on this, I think, on another video. By the way, before I do what I was about to do here, I put out a video yesterday, didn't get a lot of views. I mean, it got about 500 or so, but I did an interview with a police officer from Indiana, and we went over just some basic things. Now, a lot of the Humbl investors I know are not basic investors, but if you know people who are basic investors, people who want to get started, and or maybe just they don't understand, why should I invest in the stock market? Maybe they got the wrong idea about what the stock market investing is about. That a lot of people think it's like where the rich play and dabble, bouncing in and out. That's not what it is. I would ask you, go ahead and share that video with let me see if I can get the right title here. I don't have it up right now, but go to my page, Money and Politics Now, and look at that interview. And it says how investing can get you on the thumbnail. It says out of the paycheck, living paycheck to paycheck, and grow with it. I'm not going to go over it, but it runs about 18 minutes or so. I think it's very well worth a listen for some of the basic concepts that once you hear them, if you haven't heard them before, it makes sense when you hear it, and it makes it more clear why the average Joe, especially the average Joe factory worker, should be investing in the market. And I would say doing it themselves, even if they have a 401k that's provided by the company. Get another portfolio going on your own. So that said, one thing I want to talk about that I'll spend more time on is that the game is changing on the economic landscape of where we are. It's not the same as back in December of 2017, President Trump and the Republicans cut taxes. Interest rates were low, taxes weren't low. We had a booming economy before COVID hit. Record unemployment, and you could buy in that time period, and even in 2020 after we came back off the lows of the COVID downturn, it was easy to make money then in the market. I think it's going to become a little more difficult, so I want to just kind of talk a little bit, not just about what this one stock did, but what another stock did, which I do frequently. But I want to put into context so you can have a feeling for what the overall economy is doing. Where are we in the economic game? So let's just listen to about a minute of testimony when Treasury Secretary Janet Yellen was being asked by Senator John Kennedy of Louisiana kind of about the interest rate environment.
Senator Kennedy from Louisiana is recognized.
Thank you, Mr. Chairman. Thank you, Madam Secretary and Mr. Chairman, for being here. Madam Secretary, when you were here last, and we all look forward to you coming, I asked you to tell me what you thought inflation would be at the end of this year, and you told me 2%. Do you still stand by that prediction?
Clearly, inflation this year is going to be above 2%. Just the experience so far this year makes that clearly true. But I think we are seeing monthly inflation rates taper off.
Yes, ma'am. What do you think it'll be at the end of?
So it's not going to be 2% inflation. It's going to be 4% inflation. She thinks that will come down. We'll have to see. But again, what happens is when you get inflation, it's going to drive It means that the Treasury Department, when they issue bonds, have to increase the amount of interest they're paying, because no one's going to buy a Treasury bond that pays 1% if inflation is 4%. So they raise interest rates, the Treasury Department. They have to, because people aren't going to buy their bonds otherwise. And when they have interest rates going up and you have the full faith and credit of the US Treasury behind these bonds, people go, well, if I can make a guaranteed rate of return for 10 years of 5%, and we're not near that yet, folks, but this is the simple process. Then people are going to start saying, why take the risk in the stock market where I might get 8% when I can get a 5% guaranteed rate of return? So as interest rates go up, it means that bonds start competing for investment dollars with the stock market investors. And over the last 10 years, there hasn't been much competition from the bond side of investing. It's been pretty much all the stock market. And this is what I just wanted to say. That game is changing. It will continue to change as interest rates rise. Hopefully, they're not going to go up too much, because not only are we competing then with bondholders, but that raises the cost of doing business. That means profits are not as good. That means stock prices don't go up as rapidly as they did before. So changing environment, you got to be aware of that. And I'll touch base periodically. But, I'm not here just to, as I think you already know, wave the flag and go, rah, rah, sis, boom, bah, buy this stock. That's the pump and dump guys. I'm trying to say, here's the opportunities. And at the same time, if the game changes and there are risks and things you need to know, I want to bring that to your attention, which I just did. All right, so that said, Friday night. Hey, folks, have a great weekend. I'm going to bug out of here and go have some wine, maybe a steak or two, and watch a Cardinal ball game. I hope you have a great weekend. I'll, again, be coming back to you with another recording tomorrow when we hear Allie Braun. She's a one sharp cookie, as we say, and I wanted to give you another voice on what she thinks about the future of Humbl after she went to the Nashville Summit, and so I'll bring that to you. Until then, folks, good night, and we'll see you next time.